Felix here, and a chap called the Fed Whisperer, a journalist who's been incredibly accurate on, well, completely accurate, in fact, on what the Fed's going to do. He seems to have an inside track to Fed staffers, put out a report which describes what the Fed is about to do next, which is not what markets are expecting. And I want to walk you through this because it's an incredibly important thing to understand. The entire market, all of this year, has been driven by the Fed's policy. Macro, essentially, that's what it's all been about. Of course, none of the following is financial advice. You know that by now. Don't be silly. I'm just trying to give you color on what's sort of happening here in the market from my perspective to help you become a better investor and learn things. That's really the whole point here. So the Wall Street Journal reported this, basically saying, look, the Feds will have raised rates 4 times by 75% basis points by this time next week. And the effects of this around the globe have been chaotic. The dollar surged into all-time highs, sending Japan and the UK into crisis as their currencies have plunged. And according then to Timmy Raos, who is this chap, the Fed Whisperer he's known as, says, look, the Fed expects, not we expect, the Fed expects to start pulling back on that pace and raised rates by just 0.5 percentage point in the last meeting of the year in December. That would be an enormous, gigantic signal to the market that this experiment of raising rates faster than ever, which followed on the largest money printing exercise ever encountered anywhere outside of Zimbabwe, is coming to an end. And why would they do that? Well, look at this. This is the US 2-year Treasury yield, a fairly good indicator to where the market sees the interest rates going. And it peaked sort of here. At just about 4.5%, and it's coming down a little bit now. And that's really what this news is all about. While at the same time, bond market volatility, sort of the VIX of the bond market down here, has just continued to go up and up and up and up. And that's not a healthy thing. And it's massively, massively higher than the stock market volatility. Seriously, it's the world's insanest market, that on foreign exchange, and that's all because of the Fed. And there have been tons of these kind of reports out here. This is from SMBC saying, look, the real rate has increased a staggering 280 basis points this year. This is the largest increase on record, what amounts to a 4 standard deviation move. So this here is the move. We've never really been there before. And further increases could irreparably damage the economy and financial markets. And that's what we saw in the UK, right? Like very, very simple to get markets to come to a halt, to a grind when you are creating an enormous amount of debt, but no one's there to buy it. Now, this is why we are starting to see this sentiment boost. It's not just this, but it's one piece of it. What's the other piece? Well, earnings. Earnings are not coming in as horrifically as we're expecting, and they might not be wonderful, but they're not terrible. And that's all this market needs because we're incredibly pessimistic. Now, some people will show you charts like this saying, look, big tech earnings are going to fall. Earnings per share are coming down. Look at this. It's the end of tech. No, of course it isn't. In my view, all that's happened here is that these earnings here, that block there, and this block here, and possibly a little bit of that here, and a bit of that there, were just too much. This idea that we would forever basically sit in our homes, never go anywhere, and purchase everything online and live a sort of a meta world, of course, isn't quite true. And if you take these 3 blocks here and then add up that, you kind of get back to the sort of long-term growth rate, which is more, along here rather than the negativity that we're seeing here. So we've got to be overshot. We're coming back down to normality. That's what markets do. It's what markets have always done. And you can, of course, make a ton of money out of that, which is exactly what we're doing. We have made 114% so far this year. We're up 13% just on October so far. And I'm an incredibly cautious trader, so I don't take any gambles, any risks, don't care which way stocks go up or down or whatever. We aim to make money essentially out of volatility. And that's the way we do it. You want to learn how we do that? Well, let me show you how you can learn that. Book a call with us at felixfranz.org/coaching before we continue here with a bit more macro. And All you need for it is a 5 or 6 or 7 or 8 or a 9-figure portfolio. Those are the students that we have. If you're not quite there yet, but you still want to learn my trading protocol and you still want to learn how I implemented it, maybe not why I developed or how I developed it. I'll talk to you about that in another time. But for me, it came from a point of necessity, needing to build an extra income stream. So I sort of took my banking background and economics background and so on, and applied it and fell on my nose about a dozen times, at least, maybe 2 dozen or 3 dozen times, until I actually came up with a strategy that works in all markets. And that's what I teach you guys. I don't tell you what to buy, I don't tell you what to sell, but I tell you exactly what the strategy is so you can be an independent, well-informed trader who understands what's going on in the market. So if you're not quite there, you're starting at 4 figures with your portfolio, then check out felixschwenzer.org/options. Coupon code is FREEDOM. It's 100 pre-recorded lectures, and you get access to daily chat support and everything else that you need. You also get to see me trade live every week. I will do a live later this week as well. I'll schedule that. So if you join today, you'll be able to join me there on that as well this week. And let's continue here on a little bit more data here. So margin accounts are basically over. Nobody is left in a margin account. Even the AMC crowd are scared of margin, which is a really, really good thing. A horrible learning experience, unfortunately, people seem to have to go through. We're up here at the height of the market, and now we are down there. So we've lost about, what is that, 550 billion or so has come out of margin since the peak of this market. And that's a good thing, to be honest with you. Unfortunately, a lot of people got margin calls. Honestly, margin and stocks, don't mix. Don't do it. And then we've got all of the automated money, all of the algo funds flowing in this month, somewhere between 34 to 200 billion just this month. And also for the following month, that is. Plus, on top of this, there is about 400 billion in buybacks coming in as well. So there are a lot of reasons to be temporarily bullish. And I do mean the word temporarily, because I think fundamentally we still need to go a little bit further here. And just bear in mind this chart. Please pin it to your forehead or somewhere like that. And know that, in my view, we're somewhere down here. Nobody really knows where we are, but we're somewhere down here. People are feeling fearful, desperate, panicky. They're capitulating somewhere down there. And that just means we're somewhere near a market bottom. Nobody ever knows where the market bottom is. And when you're there, you never know where the top or the bottom is. And it doesn't really bloody matter. All you need is to be aware of the cycle you're in. And you know that here you are buying stocks cheaper than when your neighbor was telling you about how wonderful Tesla was, and that was up there, right? So you can kind of read these signals when all the headlines are full of everybody's a millionaire, look at people making billions of dollars overnight with crypto and stuff. That's when you want to be a little cautious, maybe when you want to take some profits, when you maybe want to reallocate. But when everybody is miserable and depressed, for me, there's only one thing to do, and that's to buy good quality stocks every week. And that's what I will continue to do. You want to find out what good quality stocks are? We've got a little tool here for that. You can literally put any ticker you want in here. You hit the update button and it runs a little script for you. And it pulls out these stocks, just random ones I've picked for like a research for videos and so on. And then it gives you numbers, important numbers, gross margins, ROE, operating margin, debt over equity, forward PE. It gives you long-term earnings per share growth. It gives you insider ownership. All that really, really crucial stuff. You can get your hands on that. How? Let me show you. Go to felixschwenzer.org/Patreon. Links down below. It's like 20 cents a day or something like that to join that lovely community. I'm obviously logged in. You can't see it. But yeah, if you go there, links down below, felixschwenzer.org/Patreon, get your hands on that and become a better, smarter investor. That's what I would recommend you do with your research. And that's pretty much it from my side. So what do you make of that? Do you think the Fed is actually going to pivot? Do you think we are going to see the reasonable economists who say, look, it takes at least 6 to 18 months for interest rates to show up in the real economy, and you've done everything in 5 months, so how do you expect data to really improve? Doesn't this therefore merit a break? I think it merits a break. Now, it doesn't mean it's necessarily the end, but a break the market will love. The market will be euphoric once again. So it's something to be prepared towards if you're a trader. Maybe don't just be clearly bearish, because you might get slapped around a little bit. I always aim to be market neutral. I aim to make money out of the market moving up and down. I don't particularly care which way it goes. So if that's something you were interested in learning, if you want to figure out how I made 13% on this month so far, 114% on the year so far, give us a call, felixrenzel.org/coaching. We walk you through it, explain how it really functions. And a huge thank you for watching. I appreciate it. And I hope to see you on the next one.